Alright, so today we're going to learn how to correctly recognize revenue earned for a long-term contract. And so today's question states, in 2018, Westgate Construction Company entered into a contract to construct a road for Santa Clara County for $10 million. So let's write our revenue is, total revenue is $10 million. Road is completed in 2020. Information related to the contract is as follows. And then Westgate recognized revenue over time according to percentage of completion. So percentage of completion just means we'll be calculating how much revenue is allocated to each year, depending on how complete the project is, or how many costs incurred during the year, or how many costs have been incurred to date compared with how many costs there will be total. So to start off, we're going to focus on number one, and we're going to start off with kind of calculating the revenues per year. So we're going to start off with 2018 as our main guide. So first off is we take the cost incurred during the year, which is $2.4 million. And you divide it by cost incurred total and estimated cost to complete. So 2.4 million plus 5.6 million. So you get a total of 1.8 million, I believe. 2.4 divided by 8 million. And that should give you 30%. So this 30% means that 30% of costs were incurred at the end of 2018 compared to 100%, which would be incurred in 2020. And so we're going to multiply this 30% by the total revenue that we would receive, which is 10 million, and we would recognize 3 million of revenue in 2018. And then we can use the same process to figure out cost and revenue for 2019. So 2019 is, you'd actually add up 2.4 plus 3.6 over 2 million plus 2.4 plus 3.6. And then so you should get 6 million from this, and then 8 million from down here. So equal 75%. And you would just do the same things, but 75% times 10 million, 7.5 million, and then you take away the revenue recognized in previous years. So you would actually only recognize 4.5 million. Yep. And so 2020 is actually the easiest part because it's completed in 2020. You don't even have to calculate. You know that it's 100% times 10 million. So the crucial part is just taking 10 million subtracted by everything in the past, and you should get 2.5 million as your revenue for 2020. And then we're going to move on to number 2. So we'll be creating the journal entries, and typically for this type of question, there's 3 types of journal entries you need to create. The first one is to record construction costs. And we almost looked over it, but in order to calculate gross profit, it's super easy. For all the years, you would take the revenue and then subtracted by the cost incurred through the year. So this would give you 600K in profit, subtracted by, this would give you 900K, subtracted by this, that's how I got the number, and then 2.2 million is the last one. So you get 300K in revenue for 2020. All right, now back to journal entries. So the first problem is to record construction costs. And how you do this is you see the costs that go into right here, costs incurred through the year. These we're gonna put them into an account called construction in progress, and this is just if you ever learned of work in progress, it's just a working account that you can put in, take out. It can represent profit. It can represent investment in the construction contract. And so in this case, I'm just going to do one example for all of them. We're going to stick with 2018 for all these examples. And then basically is, so the debit account would be construction in progress. And your credit would be various accounts. And if you ask why we don't record cost of construction instead of construction in progress, it's because cost of construction is basically very similar to cost of goods sold, and so you'd have to match that with a revenue that you earn, and at this point we don't have a revenue that we earn for this journal entry. This is just showing the cost that we incurred and then putting them into the construction in progress account. And so in 2018, you take the numbers from up here, 2.4 million, 2.4 million, and that would be your first journal entry. Your second journal entry would be recording billings. So what billings means is just how much you actually bill your customers per year, and this doesn't relate to how much profit you earn at all. It's just maybe there's terms defined in the contract for how much you're billing them, or maybe it's your company decides so. And so the numbers right here, billings during the year. So 2018, we're going to take a 2 million number, and billings is how much you expect to receive, right? So we're going to debit our accounts receivable for 2 million, and then credit our just billings on contract. And then again, this is also an account that will be closed out at the end because it will all be taken out from billing. So 2 million. And then the third journal entry that we have to complete is to record cash collections. And as you can see up here, up here, it also gives you the cash entries, cash collections. So even though we billed them 2 million, perhaps they only pay us 1.8 million. It doesn't mean that they have to pay us exactly what's on the billing, basically. And so when we gain money from our customers, we're taking it out of accounts receivable and we're getting it in cash, right? So we're going to debit cash, then credit accounts receivable. And then in 2018, the number was 1.8 million. And then the last and most important journal entry, those are the three basic ones really that didn't require much calculation, but the fourth one is going to be to record profit. And then you would do this at year end. So remember when I mentioned before, when would we debit the cost of construction? This is exactly when. So profit in 2018 was 600,000. Cost of construction was 2.8 million, and our revenue was 3 million. So we're just gonna really quickly plug that into our journal entry. So first off, we are going to we'll start from the revenue because that's easiest to understand. So revenue from long-term contracts, easy was 3 million, right? And our cost of construction was 2.4 million, and these two go against each other, they match each other. And the profit that we recorded was 600,000. So we're actually going to record our profit in construction in progress. It's basically just going to show us the difference between revenue and cost of construction, especially since they don't match up. Yeah, so that would be around the same for the other years. And next off, we're going to work on calculating the amount of revenue and profit, assuming these different cost and currencies. So requirement 4. And so 4, we're just going to do basically the same thing. And so we're going to say, well, 2.4 million divided by, I think it was 2.48 million, to get 30%. This is to 2018. And so 30% of our 10 million is again 3 million, and subtracted by our cost, so that will be our revenue recognized, and subtract by costs incurred should be 2.4 million equals 600K in profit. Sorry. And next we're going to move on to 2019. 2019 is 2.4 million plus 3.8 million, all over 3.1 million plus the number that we got here. So that was 6.2 million, I believe. It's 6.2 million. So that would actually give you like 6.2 million over 9.3 million. We're gonna round that to a 66%. Actually, yeah, so 67%. We're gonna round up. And then so our 67% multiplied by our 10 million would give us 6.7 million in revenue. To figure out the gross profit, we would just take away the costs incurred. Actually, you would first take away our 3 million in revenue from last year. So you would actually come out with 3.7 million subtracted by 3.8 million, which actually gives you a loss of 100K. And in 2020, go up here, it is 3.2 million. So we're going to take our 2.4 million plus 3.8 million plus 3.2 million. Well, basically it's 100%. Subtracted by 3, subtracted by 3.7, and basically the amount that we'll recognize is 3.3 million. And our costs were 3.2 million, so we can take that away to get a profit of 100K. And next we are going to move on to requirement 5. So again, these are even different costs. And we're going to, let's see, we're going to work on, I think we'll work on it right here. So requirement 5. Again, what we're going to do is we're going to split it into 2018, 2019, 2020. Alright, so let's take our 2018 numbers. It says 2.4 and 5.6, so 2.4 million divided by 2.4 plus 5.6. So again, sorry, that's just 30%. And that would be 3 million in revenue. And take out costs, get 600K in profit. 2019 is 3.8 million. And also 4.1 million actually, plus our other previous numbers. So plus 2.4 plus 3.8, and you should get that's going to be a kind of tricky number, but we will try our best. It's going to be 2.4 plus 3.8 is 6.2. 4.1 plus 2.4 plus 3.8 is 10.3. And then so here you'll actually notice that the total amount of cost that total and estimated, right, is 10.3 million, and 10.3 is actually greater than our 10 million in revenue that we'd be getting in total, right? So this would be where you notice an overall loss, and in our other problem it was actually a periodic loss because it's found out after the fact, right, by subtracting the costs incurred during the year, but then overall is found out through the total amount of costs that have occurred and you predict to occur. So yeah, you'd actually estimate a gross loss of 300,000. Just write that down. Sure, this is 600. And then once we figure out 2020, it'll actually be very, very similar. So 2020 is take 3.9 plus 3.8 plus 2.4, and you'll actually get 10.1. And so compared to, again, to our $10 million in revenues, and cost is greater than our 10 million in revenue. And then here, I mean, you could go ahead and find the revenue, but I'm going to focus on the amount of predicted, or in this case, it's actual loss. So 100K loss. And most of these are estimated, and before you actually calculate the loss, you have to, first off, well, you can recognize the profit like normal, right? So, 2018 profit would just be 600K profit. In 2019, because remember, profit is recorded in our CIP account, and when there is a loss, first you need to take out the 600 in the CIP to cover the loss, and then whatever is left over would be considered your actual loss for 2019. So you'd actually take the loss of 300K subtracted by the 600K in profit, and that would give you a loss of 900K. And in 2020, we estimated a loss of 100. So again, we're going to take 100K minus the estimated in 2019, so 300K. And you should get a loss of 200. Oh, it's actually a profit of 200K. And so another way to actually solve for this would be to take the these numbers, right? And then you have your 100K, subtract 900K, subtract 600K in profit, and you'd still reach your 200,000 in loss. Yep, and in profit. And so that is all the requirements for this question. Again, we're just gonna say this is periodic loss. This is overall loss. And again, this is accounting for everything under the percentage of completion. If we were to use the contract completion method, then for periodic loss, there would be no entry at all. And that is an important distinction to make. Alright, see you next time.